What the What the Hey guys, Struzyna here. I'm doing an update video on one that I put out a couple of months ago, talking about the bubble, the real estate bubble popping and how I didn't think we were in one. Now at the time, I had some good reasons to think that, but the numbers I was just looking at, plus some anecdotes that I want to share with you, have me feeling different today. So that's the whole purpose of this video, is to share that change in opinion, what I'm seeing on the ground. I've got 2 stories for you, plus a little bit of data that I think you'll find interesting, and hopefully will help you make a good decision when it comes to buying or selling or whatever you're trying to do. So let's go. Story number 1. We're listing a house here in Alameda. It's a 2-bedroom, 1-bath on the East End. I did a video on it and I'll link to it up here. It's really cool and it came out really well, but it had a ton of competition on it. Ended up with 9 offers total. Now keep in mind, this is a 2-bed, 1-bath, great kitchen and all, but less than 1,000 square feet. The offers were the majority of the offers were actually well over $1 million. And ultimately, we ended up having a very competitive bidding situation that pushed it up to the 1.1 mark. Unbelievable for something under 1,000 square feet. Though not necessarily unheard of in the Bay Area, but it absolutely exceeded everyone's expectations. But not only that, there was a ton of cash floating around in that transaction because a lot of our potential bidders had large down payments well in excess of 20%, 25, 30, some in one case 50% almost. So gosh, the amount that someone was willing to pay just to win and to get into the house shocked me. On the flip side, same day, I'm representing a buyer. We write a contract on a fixer-upper property out in Orinda. It's 1,300 square feet, 3-bed, 2-bath. It needed a total makeover. I mean, the foundation had cracks in it. There was drainage issues all over the property. The kitchen was outdated. Some of the appliances weren't working. For crying out loud, the skylights you could physically lift off the roof because they weren't even secured properly. I mean, we're talking fixer-upper property here, no doubt about it. I figured it would sell somewhere just below 1.1 million, given the fact that it could comp out, in the 1.3 million if it was totally fixed up. I figured we'd get about 10 offers and we would find ourselves towards the top of that. So they came in at $1,075,000 to start. And all of a sudden I get this call later in the evening from the agent saying we were one of 26 offers and our 1.75 offer was tied for 14th. 14th, are you kidding me? Ugh. I don't know the exact number, but what I'm told is the winning offer got real darn close, if not exceeded 1.3 million, which is insane because that's the number the house is worth if it's fixed up. Now, someone could do an addition on the back and add another bedroom and bathroom and all of that kind of stuff and push it up into the 1.5 world, but still it's gonna cost an absurd amount of money to build that relative to what you already spent to buy it. And there's no way those numbers work. They can't work even if you don't need to build a margin in to flip the house. I don't care, it blows my mind. So that got me thinking about my video that I did about the bubble. Right? So that got me thinking, I did a video a couple months back about the market and the bubble and how I didn't think we were in one at the time. However, recent events have made me question that initially. So I went back and revisited the definition of a bubble. And what I found was that, a housing bubble is started by excessive demand, then it leads to inadequate supply, and then exuberant spending really pushes and inflates the bubble further. I think both of the anecdotes I just gave you are great examples of exuberant spending. I have another similar story from December where there was a total fixer-upper property in Albany, which fixed up would probably sell around 1.1, maybe 1.15, and someone bought it for well into the $900,000 range, and this house needed a new foundation and everything. I mean, it was ridiculous. There's no way someone can make money or be upright on this house unless they sit on it for 10 years. It's just ridiculous. So exuberant spending to the point of collapse. Now that leads me to how did we get here? Where are we sitting today and what do you need to know if you're gonna enter the market as a buyer or a seller? Simply put, we are just in a really low supply moment. Historically, we've had less supply this year than we've had year over year in 2019, but we've had in a shorter time on market and all of that kind of stuff, all that data has led us to this point. I'm not going to totally bore you with charts and graphs. I do have a couple to share that I think are interesting, but at a very high level, what concerns me about this is that eventually people are going to get to a point where buyers no longer want to buy or transact, and sellers want to continue selling. And at some point, that's going to shift to coming back towards a more equal and balanced market, and that's when we'll correct. Now, hopefully, because there's so much cash in the game with all of these winning offers that I'm talking about, those people will be willing and able to absorb a dip in value, come down 10 or 20%. They can absorb it and ride it, and they intend to be there for 10 or more years until the next time the house is worth a substantial amount of money. But if not, we could find ourselves back in a 2008 situation. I doubt it's going to happen at that scale, but that is the direction it could go. And as you can see, buyers in California are starting to think that it's less of a good time to buy, and sellers are increasingly thinking it's a good time to sell. Now, it's probably too early to say that we're getting to that point, but nonetheless, I think it's something to pay attention to. One other thing is that price growth is real. As I've talked about in that previous video and in others, the inventory is an issue here, especially in the East Bay, but in the Bay Area in general. There's just not enough building of new units that's happening at the pace that household formation has been happening and population growth has been happening. Though we might now start to see a population decline, but we have a huge surplus from 10 years of extreme population growth that even just a 1% dip this year probably won't make a huge dent in the grand scheme, because we've got such a big stack up that we have to kind of undo that to come back to some sort of equilibrium relative to how much inventory we have available for people to buy. So what's happening is the existing inventory is just getting pushed up because there's a similar number or a high number of people who want to buy that inventory, but there's only so much of it, and so the value goes up until people can't pay it anymore, and then that's where you're at. But because there's so much cash out there and so many people who are willing to pay it, it's continuing to push the prices up, hence that exuberant spending thing. So bottom line here is we're at a really low inventory moment, 1.1 months as of December, and I would argue that's changing right now, but what direction? Hard to say. It's probably about a month of inventory at this exact time of recording and 13 days on market. People are just snatching up what's coming available. And that's what was strange about December. Stuff turned over quickly and regularly. Stuff did not linger on the market so that the early January crowd had stuff to look at that didn't sell in December. That's not the case this year. So there's even less inventory, and we are now entering our spring market when most of the buyers come back, and historically, except for last year, it is the biggest seller's market and the highest price records are set and that sort of thing. We're entering that phase right now. Typically after the Super Bowl is when you can expect that to really launch and then continue until probably early April. So what does this all mean to you? If you're a seller, now is probably a pretty good time to try and sell and really maximize your price and maximize your return. But if you're gonna go then turn around and buy, I might consider that a little bit, unless the perfect house comes along that you absolutely know that you're gonna be in for 10 or 15 years. Now may not be the time. And now may not be that time because you are going to have to compete and compete hard for it. And if you're unwilling to spend another 10, 20, 30 grand over the comps or 50 or whatever it is in that particular instance, it's gonna be hard to succeed. And it's gonna be hard to succeed if you don't have an excess of 20% down payment, because you're simply going to be competing against cash or cash heavy buyers. Trust me on that one. If you're thinking about buying right now, you may want to continue to dabble and watch until the perfect thing comes along, and then really jump into the market once you've seen another month or two of data, see where things are going, and then maybe let a lot of those cash-heavy buyers transact, duke it out, and so the rest of you are left have that 20% down and have a more comp-driven view of value, if you know what I mean. Do I know what's gonna happen in this market? Absolutely not. What I can tell you is it's gonna be really, really competitive for the next 3 months, and if you're getting in the market now, you need to buckle up and prepare. If you're unwilling to compete, if you don't have the means, the resources, or just the fortitude and appetite for it, now may be a time just to take a step back and just watch for a month and see what happens. If you know you need a property, if you have cash and you want to put it into the perfect property, now is a time when you can absolutely succeed, because sellers are going to be paying attention to who has that cash, because it's a surer deal, especially when you're pushing the price. And as you as a buyer need to know that and position your offer accordingly. I did a video on that, I'll link to it up here, on why having cash and how you can structure it in a way that looks really attractive, whether you intend to use it or not. So check that one out. But just know that if you're going to transact for the next probably couple of months, you really need to know that you're moving into your forever home, so that when the market does correct, you're not in a bad spot with it. You're not upside down and needing to sell, because that's when you really lose money. But you can ride that wave out, because this house fits you perfectly and you're not going to move for 10 or 15 years anyways. So hopefully you got something out of that. If you did, smash the like button and subscribe to the channel, because I'm going to continue to put out weekly content just like this, and you're not going to want to miss it. So without any further ado, this is Struzyna with the Gunderman Group at Keller Williams Luxury International, signing off for now. See you guys on the next one.